ACRE stock. Is this the best dividend REIT to buy right now? ACRE's commercial stock is down almost 8% year to date, which is very interesting, since the S&P 500 is down almost 15%, which is quite the difference. The reason why people love ACRE stock is because of the dividends, 9.8% dividend yield, which is of course really high. But does this mean that ACRE stock is a buy? In this video I'm going to show you real quickly what ACRE does, the historical returns, the fundamental analysis, dividends, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. And I want to thank Mitchell for bringing up this stock. If you want me to cover a stock, just comment down below and tell me which one. So, what does ACRE's Commercial do? ACRE's Commercial Real Estate Corp is a specialty finance company and a real estate investment trust, providing commercial real estate loans and related investments. The company operates in one segment, namely originating and managing a diversified portfolio of CRE debt-related investments. A very important note here is that ACRE's Commercial has a real estate focus, but isn't a fully operating REIT. So this will be interesting later in the video where we are going to analyze and value the company. ACRE's Commercial is a specialty finance company according to their investor presentation. So if we dive in the latest quarterly report, we see that ACRE had a second quarter net income of 10 million, or $0.2 per diluted common share, and distributable earnings of 19.2 million, or $0.38 per diluted share. They also declared a dividend of $0.33 per common share and a supplemental dividend of $0.02 per share, total of $0.35, which is barely covered by the 0.38 distributable earnings. So even while it's covered with a payout ratio of 92%, I would like to see a lower payout ratio here. They expect to fully cover the regular and supplemental dividends from the distributable earnings for the full year, so this comforts me a little bit. If we check the revenue breakdown, we see that interest income is their only income source. Minus the interest expense, we are left with a revenue of 25 versus last year 23.5, which is an increase of roughly 6%, while the 6-month ending increase year over year was almost at 10%, so that's quite interesting. The earnings per share also decreased year over year, so this is something to keep your eye on. And now that we know more about ACRE's Commercial, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark, and next to that I included ABR and RC as well. Both ABR and RC are in my portfolio for a longer period of time. On the 5-year chart we see that ACRE returned a 69% including dividends, while the S&P 500 returned 80%, meaning you were better off owning the S&P 500 on the 5-year chart. But please notice that before the big drop in March 2020, ACRE outperformed the S&P 500, and only after the big drop in 2020, ACRE underperformed the S&P 500. RC returned 32% in the past 5 years, while ABR, one of the biggest stocks in my portfolio, returned more than 200%. On the 1-year chart we see that ACRE returned a minus 6%, while the S&P 500 returned a minus 8%. RC is nearly flat, while ABR had a minus 9% return. On the 6-month chart we see that most stocks performed similar. ACRE, S&P 500 and RC all had a minus 4 to minus 5%, while ABR had a minus 8% return. On the 1-month chart we see that all stocks were nearly flat, so nothing special to mention here. Overall, I think ACRE did very well before the big drop in March 2020. So, could they beat the S&P 500 in the future again? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you'll receive similar analysis to this one every week. Let's continue by diving into the fundamentals. ACRE is a 684 million market cap company with a PE ratio of 12.8, which is lower than the 5-year average, which is a good thing in this case. This also could mean that ACRE is undervalued based on the PE ratio. Later in this video we will dive into 3 price targets to see at what price I'm going to buy ACRE. Trailing 12-month revenue is at 108 million, and in this graph we see that revenue went up over a longer period of time. It's not always really steady and consistent, but over a longer period of time I think it's pretty good. Net income is at 53 million, which gives us a profit margin of 49%, which is slightly lower than the 5-year average of 51%, so definitely keep an eye on the profit margin. Return on assets is at 1.5%, which is pretty common in this industry, so I don't mind being below my 10% minimum. Same story for the return on equity. Specialty finance companies like ACRE don't have an ROIC, so that's why we don't see a number here for the ROIC. Another typical thing for companies like ACRE is a high debt compared to the cash position. Right now ACRE has only 36 million in cash, while debt is at 8.88 billion. To me that ratio isn't that healthy. I don't mind having a higher debt than usual, since this is very common in this industry, but this gap might be too big. So it's very important that free cash flow is growing, since this is used to pay down debt, buy back shares, do acquisitions, pay dividends and all other things. Here we see that free cash flow is up, but it's not going up quite nice and steady. So although it's up, I prefer a bit more consistent pattern here, so definitely keep an eye on this number. Next up are the dividends. One of the things investors love about ACRE stock. Dividend yield is at 9.8% and ACRE pays you a $1.32 annually, or 0.33 quarterly per share. Payout ratio isn't correctly displayed here, and we saw that it was at 92% instead of 180%. Nevertheless, still keep an eye on this payout ratio because 92% is still pretty high. I prefer a number around 75%. The 5-year growth rate is at 4.5%. And they have no consecutive years of dividend growth, which kinda makes sense, with the dividend yield already sitting at almost 10%. Overall, this could be very interesting, but to me, payout ratio is too high right now. Next up are the fundamentals of ACRE versus RC and ABR. All similar companies. ABR is the biggest company in terms of market cap. All companies have a very low PE ratio, which is very common in this industry. ACRE has the highest PE ratio. Both RC and ABR have a 15% revenue growth year over year, while ACRE is at minus 6%. The 5-year revenue compound annual growth rate is at 34% for RC, while ACRE has a 15% growth rate and ABR a 17.5% growth rate. So ACRE has the lowest number here. Same story with the net income. ACRE is at only 11%, while RC and ABR are at 40 to 50% growth rate. ACRE has the highest gross profit margin and also the highest net income margin, so they are the winner here. All companies have a lot of debt compared to the cash position, which is very common for this industry. And now the part that most people are interested in. The dividends. ACRE pays a 9.8% dividend yield, while ABR pays a 10% and RC pays a 12%, which are all insane to me. Payout ratio is the lowest at ABR. And it's the same story with the dividend growth and growth streak. ABR is by far the winner here. Overall, ACRE didn't do very well. But does this mean that you have to skip this stock? Let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get my 3 price targets, starting off with revenue growth. We saw that year over year revenue started to slow down a bit. And with everything that's happening in the housing market right now, I want to be a bit conservative and ignore the average of the 1, 5 and 10 year. So I'm filling in 2, 5 and 10%. Profit margin I'm aiming for 48, 50 and 52. Same story as with the free cash flow margin, since both are looking quite steady over a longer period of time. PE ratio is at 12 right now, and this is also my low assumption. 13 for the mid assumption and 14 for the high assumption. Same story with the price to free cash flow. My desired annual return is 15%, since I want a higher margin of safety than usual, the 12.5%, which is used since I can get an easy 10% average return owning an ETF. But since it feels that this company could be highly volatile and not everything is going that great, I want a higher margin of safety, so that's why I'm using 15%. Right now, ACRE stock is at $13.5 a share. I hit analyze and we see some green numbers. We have a low price target of $9.3, a mid price target of $12.26, which is slightly below the current stock price, and we have a high price target of $18.7. So if you believe these high numbers, ACRE could be a buy. To me, the mid to high range is the most justified here. But to be honest, I'm leaning the most to the mid price target of $12.2. So my final conclusion is that I really like the business and a lot of things about the stock as well. Dividends are insane, but payout ratio is just a little bit too high to me. Valuation could be interesting as well, but with everything that's happening in the housing market, I don't want to invest in a company that's not undervalued big time. And since I'm leaning to the mid-price targets of $12.2 a share, I think I'm going to wait for the stock price to drop to around $10 or something. So for now, I'm adding this stock to my watch list and wait for the upcoming quarters to see what happens with the company and the stock price. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.